Anyway, let's get started with what's going on in Asia business right now. So let's look at the size of the world economy. About $120 trillion was the gross domestic product for the entire world if you calculate it at purchase power parity and use current international dollars. So in the top 5 countries, 3 of them are Asian, right? China is considerably larger than the US now, and India is also in the top 5. Japan is also in the top 5. And a lot of people are surprised to find out that Indonesia is in the top 10. There are also, on the right-hand side, 10 other Asia economies that are in the top 50 biggest economies in the world. Now, that alone means that there's some very active markets in Asia, but I think the real interest in Asia comes from how countries got there. So if you look historically at the growth in gross domestic product, there's China, right? So you see Japan and Germany are very nice, stable, low-growth countries. You see India coming up noticeably. Really, India's growth rate almost tracks the United States. One thing I want you to notice, if you compare the amounts back in 2003 to the estimated amounts in 2017, 2018, you're seeing more than a 2x growth in most of these countries. You can't say that for Japan, you can't say it for Germany, but for most of these countries, you're seeing greater than a doubling of the size of the national economy in those 15 years. That's a lot of new money to spend, and this is what business people get interested in. If you look at the so-called tigers, these are the places that used to be the jumping off points to China. You see South Korea growing quite fast. You see Taiwan growing quite well, and you see Singapore and Hong Kong really close to each other. A slight bit of divergence later. But even Singapore and Hong Kong, at their slower growth rates, are more than double their size 15 years ago. Southeast Asia. Yeah, this is why Indonesia is a country that we really should pay a lot more attention to. People have missed Indonesia. And the growth rate for Indonesia, it's almost 3 times as big as it was 15 years ago. And the other economies are also keeping above that 2x growth rate over the last 15 years. So the big picture, what's going on recently, first of all, I think you have to say that Asia is discovering itself or developing its own ecosystem for growth. The United States is kind of letting itself be pushed over to the side. And one factor is that what's happened as the increase in wealth in Asia has come, a lot of that is coming from the rise of a middle class. And so what used to be famous about Asia business is that it was the world's supply chain. You would have materials extracted in Australia and Indonesia. They would be put together into parts in Japan and in Korea. They would be packaged and put into systems in Malaysia. And then these things would be put together in China and sold on the world markets. Now, they're sold in Asia markets. And that's the biggest change, I think. Retail spending in Asia is growing faster than GDP growth in every country in Asia except for Japan. And this is still the case even though the general GDP growth in China has slowed from about 9 or 10% down to about 6.5%. Consumer debt. Okay, the more people spend, the more they want money to spend. So consumer debt is increasing. You see this in the graph here. Notice the sharp rise in China, steady rise in South Korea, a rise in Malaysia, and quite a rise in Thailand. And this is both good and bad, right? The more consumer debt there is, probably trade balances would naturally become lower with the United States, unless the United States is accumulating even more debt. I mean, that's one problem. But a lot of the Asia consumer debt is short-term. It's not fixed rate like a fixed mortgage, so it's dangerous stuff. People could get to the point where they can't pay back their debt quite easily, even though mortgage debt has increased as a percentage of household income. The second factor is that there's this self-awareness of Asia as a unit. That's kind of maybe the wrong word to use, but this business of the Trans-Pacific Partnership, after the U.S. pulled out at the beginning of 2017, the other 11 countries decided to go on and do it without the United States. They signed the agreement a few weeks ago, and it's now in the process of being ratified by the different countries. Now, the participants are not just Asian countries, but they're definitely led by Japan and to a certain extent Australia. And one of the important points about TPP is that there is a lot of things in this 3,000-page agreement that is not in a traditional trade agreement. Most traditional trade agreements are about, tariffs and the number of oranges you can send into a country and that kind of thing. This has a lot about data privacy, a lot about data governance, a lot about e-commerce that is really forward-looking for a trade agreement, and they suspended a few of the provisions. The new agreement is basically 9 pages long, and it says we incorporate the 3,000-page agreement by reference, with the following exceptions. And there are 22 exceptions, most of which were things that big American companies were arguing for. So they have been suspended, not abolished. So the way is open to the U.S. to get back into it if we want to. Don't hold your breath. More than even this, though, investment inside Asia is really huge. So you're seeing a lot more investments inside Asia by Asian investors, not by Silicon Valley investors. You're starting to see unicorns in Asia. You're starting to see more mergers and acquisitions as exits in Asia. This is actually co-occurring with the rise of high net worth individuals in Asia. So for a long time, Asia really missed having angel investors. The potential's there. Now, the bulk, the plurality of high wealth individuals in the world, people who have more than $1 million of investable assets, not including their home, are in Asia Pacific. So notice how this block has grown over the last 8 years, 6 years according to this. It only goes to 2016. So far, it still feels like a dearth of angel investors. Okay, we'll come back to that in a little bit. The other thing that you have to say about Asia becoming its own ecosystem for growth is that Asia consumers and companies are both very aware of what we would call societal problems. And they're not just taking them as problems or things that we're stuck with, they're turning them into business opportunities. So one of the most famous ones is demographic change. Talk about the aging society all across Asia, people get excited. And they're looking for business opportunities. A lot of the new digital technologies are basically leapfrogging what we've done in the West to make things accessible to people who haven't been serviced before. So for example, mobile banking. About a third of the people in Southeast Asia did not even have a bank account. And so now mobile banking applications are a really big deal all across Southeast Asia. Interestingly enough, the United Nations commissioned this Business and Sustainable Development Commission. And the Business and Sustainable Development Commission it has about, 16 or 17 people on its board of commissioners, including Jack Ma, the CEO of Temasek, and Sunny Verghese, who's the chair of the financial group in Singapore. So they came out with a report last June that said that there are about $12 trillion of new business opportunities that can be achieved by the year 2030, that's a long time, in regard to addressing the 17 Sustainable Development Goals that the United Nations has put out. So $12 trillion, and they say $5 trillion will probably be achieved in Asia, 40%. So out of that, they see the biggest opportunity for China, $2.3 trillion, a $1 trillion opportunity in India, in developing Asia markets, read Southeast Asia, $1 trillion, and in the more developed Asian markets, you're still looking at $700 billion that businesses are probably going to find in addressing environmental and social sustainability problems. So, of course, the shift to the digital economy is definitely happening in Asia. This is a big deal as well. The second major factor going on in Asia right now is that Southeast Asia is the battleground for global influence. First of all, on the government level, we had the TPP -1, so China has a much bigger regional trade agreement called the RCEP, the Regional Comprehensive Economic Partnership, and that would include all of the 10 countries in ASEAN, plus the 6 countries that do business with ASEAN. What an interesting way of developing it, of defining who's going to be in the trade agreement, ASEAN-centric. The other thing that China is doing is this huge One Belt, One Road initiative, now called the Belt and Road Initiative. And it's really an infrastructure investment project that started out with the countries that were historically in the Silk Road between China and Europe, but now is extended to over 68 countries all over the place. But certainly Southeast Asia is in the center of a lot of what's going on. They built their own bank to fund a lot of this. China has a 26% stake in it. And currently, China has put over $150 billion into One Belt, One Road projects. And the total investment by all parties, because usually this is a subsidy from China that must be matched by local funding, by the local government or by local industry, will reach about $4 trillion. So this is a lot of money. But the problem is other governments might end up owing China a lot of money. This has happened in Sri Lanka. Sri Lanka got some money to develop their ports from China. They couldn't pay back the loans, and so now China has a 99-year, more or less free lease to use the ports in Sri Lanka for military or civilian purposes. So this is definitely about influence, and Southeast Asia is kind of in the center of it. Look at the investments that the big companies are making. So Alibaba made a $1 billion investment in an Indonesian e-commerce company in August last year. They increased their total investment in Lazada, which is a competitor to Tokopedia, to $4 billion. They're in talks to acquire an e-commerce firm in Malaysia that had already been receiving money from a South Korean investor, SK Planet, and the Malaysian telecom company Axiata. So not just Alibaba. Tencent is definitely in the game. They invested in the ride-sharing service Gojek, which is a competitor to Uber in Indonesia. And they had also backed Sea Limited, which does online games, before Sea went public on the New York Stock Exchange last year. So they probably made good on their investment, although right now Sea is trading below its IPO price. Tencent outspent the other famous internet companies in China, Alibaba and Baidu, in mergers and acquisitions over the last 6 years, spending $62.5 billion. A lot of this is going down into Southeast Asia. And you see the fights going on not just on the investment front. So Amazon has started its Prime delivery service in Singapore last summer, and complete Prime membership is available in Singapore since November. And this is competing against largely other Southeast Asia and Asia-backed competitors. Lazada had come up with its own version of Prime membership before that. And they were doing this in partner with Uber and in partner with Netflix. Expedia has made a $350 million investment in Traveloka, along with Sequoia, the US version of the firm, and JD.com, which is a Chinese e-commerce firm. And then the latest news kind of the last couple of months is that Uber is having to sell its Southeast Asia business to the biggest ride-hailing company in Southeast Asia, Grab. Grab claimed, at the time I put this together, to be in 36 Southeast Asian cities and have 1.1 million drivers. Latest number I heard is 90 cities and 5 million drivers. So this is not good for Grab, because now Singapore is investigating this as a possible non-competitive activity. That was just in the news today. But probably something's going to happen. And notice that Grab was being backed by the company that basically ran Uber out of China, Didi Chuxing. So this kind of battle for influence is really happening a lot on Southeast Asian territory. The third big thing going on in Asia business right now has to do with economic development. And this really pulls back to an 80,000-foot level, maybe the view from orbit, about what goes on when a company industrializes and becomes an advanced economy. The so-called factor-driven economies, if you think developing economies, that's fine. Basically, it's at this stage where you see a gold rush of growth, because there is no organized industrial base at the beginning of this period. And so creating the industrial base is a huge opportunity. The government at this kind of stage of growth is really doing basic commercial laws and kind of really trying to establish the rules for having business. The next phase that the World Economic Forum calls efficiency-driven is when a country has a few companies that really become global players. They're becoming big, multinational companies. They are able to get the best labor because they offer the best kind of conditions. Parents want their children to go to work for these prestigious companies. This happened to Japan in the 1960s. It happened to Korea in the 1980s. It's happening in China right now. And the things that make economies strong at this stage are efficiency, the ability to scale up, the ability to do things really, really well, like precision manufacturing. It's at this stage that governments start to pay attention to intellectual property. And then once you get up to about $35,000 a year gross domestic product per person, all calculations at purchase power parity, where do you get your next growth? The big companies have already globalized. So where is continued growth coming from? Innovation. And the World Economic Forum basically looks at this. It's at this stage where fresh new ideas and out-of-the-box thinking become keys to growth that the big companies don't see. This is why the big companies start to look at startup companies in this stage. Anyway, this kind of a situation in Asia is having the following kind of outcomes. Japan and South Korea are really in the innovation-driven stage, but not comfortable there yet. They are still having trouble with encouraging entrepreneurship. The big firms basically control the B2B business sectors, and they are not doing a really good job with open innovation. This is a complicated situation, but we'll talk a little bit more about it. But in both Japan and in South Korea, in the last 2 or 3 years, you're seeing a huge explosion in entrepreneurial activity. It's really noticeably different when you go to Japan now, even than 3 or 4 years ago. In China, I've seen one published article in March last year that worried about the middle income trap. I've been talking about the possibility of a middle income trap in China for a couple of years now. And sure enough, the problem is that the big companies become so prestigious they siphon off a lot of the good labor in the labor market that would otherwise go into startup companies. Not necessarily as entrepreneurs, but as workers in startup companies. Also in China, there's a lot of government research funding that's going to universities and national research institutes, but the famous companies in China didn't have a whole lot to do with that. Baidu, Alibaba, Tencent, maybe Huawei is an exception. But most of the companies that have really become the global companies in China were private sector companies that didn't have particularly close connections with any of the universities. So it's questionable as to what kind of return the government's really getting from its research funding. And it's also dangerous because one of the things that countries tend to do at the middle level, this efficiency-driven level, is the governments start to pick the winners. And governments can pick winners for infrastructure development a lot easier than they can pick winners for consumer-driven growth. Governments somehow don't think like consumers. You saw this in Japan with the national projects in the 80s and 90s that didn't really turn into anything. You're seeing it now with Korea, kind of its continuing frustration with the chaebol. And so will it be a trap in China? Right now we don't know. It is early to see. There are good things for and there are good things against. Let's take a look at what's happening with the kind of actual participation in entrepreneurship. Any questions or comments about what I've said so far? You want to take a minute and talk about this? Because we're about to get into another set of data here. Go ahead.
Will the slides be uploaded?
Yes. asia.stanford.edu. You can always find them. I'll put up the slides within a day or two, and hopefully the video will be up within a few days too. So,
what's causing the entrepreneurial growth in Korea and Japan? You mentioned that it's the dynamics there in that space has changed a lot in the past few years.
To a certain extent, I think that the system had to reach a certain amount of torque before it broke. And I think that we're really seeing more students, more people who are not satisfied with what used to be the best way to fame and fortune, which was to go to work for a big company. You're seeing more fluidity. You're seeing young people who will go to work for a big company for a few years and then quit. So I think that it is, it does have a relationship to the government and the media positive hammering about how important entrepreneurship is for the country. So that has had an impact. But I think that more than that, the system was just ready to change, and it was going to change sometime. Finally, it's starting to change. Good question. Other questions before we go? Go ahead, Mark.
I heard that the investment in Asia is growing, but in Japan I heard that still VCs don't have a capability to look into the what is going to good business, and so that's why many money is there, but they don't know where to invest.
Yeah, okay. We'll come back to this because I've got more slides on VC as we go along. Good question.
Do you think these trends in Asia have to do with the percentage of people from each Asian country coming to the US or Western world for higher education?
Wow, what a great question. I'm not sure. I think that certainly the success of Silicon Valley has been attractive to the rest of the world. Okay, but that's media. We have had a lot of people coming here from China for years now, right? And so I think that some of them are going back and doing interesting things. So Bobby Lee, who was BTC CEO, is coming back at the end of the month. He'll talk about this. I think that you have just a general favorable view about entrepreneurship that is catching hold. And this is exactly where we're going with this part of the talk, okay? So today's lecture, I want to first introduce where I'm getting a lot of my data. So there is this thing called the Global Entrepreneurship Monitor Consortium that's run by Babson College, and there are 3 other major partners in this, but there are thousands of people involved in data collection for this because they survey almost 150 to 200,000 people a year. They will not put data down for a country unless they have gotten good surveys from a sample of at least 2,000 people for a country. So it's a big survey. It's done every year. The first one they did was 1999, and I'm only picking the parts of it that I trust. So there are other things in this that are a little bit more controversial, but what I'm looking at are the actual the adult population survey that they're doing to find out how many people are involved in entrepreneurial activities and what are the attitudes by people in the population if they're not involved in entrepreneurial activities. So their website is where you can get all this data. I pull the data in a different way than they do because there is a lot of cultural difference between countries, and if people say they're afraid of failure, maybe that's a culturally acceptable answer in some countries, and it's a less positive answer in other countries, right? We don't like to admit being afraid of failure here, but if you're in Asia, maybe you think that you're being really arrogant if you're not afraid of failure. So there's a lot of cultural difference, but if you look over time at the same country, then you can see a lot of changes that may be meaningful. So at the core of what I'm interested in is what they call total early stage entrepreneurial activity, the T rate. And this is people who are either setting up a new business or they're running a new business that has paid salaries for less than 3.5 years. And that's better than stage of funding or anything else. Once a company starts to pay salaries, it kind of is on the growth to stability as a startup company, we hope. So this total early stage entrepreneurial activity is people in this part of the process. The general trend that they published is that the T rate decreases as countries go through this process of economic growth. So the far left over here, these are factor-driven economies, efficiency-driven economies, and innovation-driven economies. So that's their average for 54 countries. It's interesting that when you divide up men and women, you see different kinds of profiles. But one thing that's really important is that the women who are involved in entrepreneurship in the middle stage, the efficiency-driven stage, by far are doing so because they felt like they had no choice. They're an entrepreneur out of necessity, not because they're trying to seize some particular opportunity. In contrast, the men have a relatively kind of stable attitude toward necessity versus opportunity at the first 2 stages in their responses to the survey. Asian economies, I don't have this, are much more driven by opportunity than by necessity. But having said that, let's take a look at the U.S. We'll take the U.S. as a baseline. So this is the T rate in the United States over the last 15 years. So, okay, after the 2008 financial crisis, people formed fewer companies. Now, it's interesting, there was a lot of people interested in entrepreneurship at this time, but maybe there was no money available, right? There was practically no VC investing going on in 2009 and 2010. So you did see a drop there, but ever since 2011, it's a relatively stable. You get some year-to-year variation. Now, let's see how the U.S. fits into the big five. These are the top 5 economies in the world. So here's the U.S., the gray line, and you see this incredible variation year to year in China and also in Indonesia. Right, not the top 5, top 10, pardon me, the Asian countries there. Japan is very flat, doesn't grow, doesn't change a lot. Maybe over the long term you see a slight amount of growth. But it's really the year-to-year variation in China and in Indonesia that are striking. Probably this indicates economies in a state of change. What you get one year is very different from what you get the next year because of things like news items and availability of money, it's public programs, that kind of thing. If you look at the tigers, all of the tigers have lower T rates than the United States does. Not a lot lower, but lower. And what you see is a real stability in Taiwan. Right, the gaps for countries are years in which they didn't take any data from that country. And yet you also see what appear to be increases in Singapore and Hong Kong and South Korea, especially this noticeable jump between 2016 and 2017. I have a suspicion that if you could go back to 2001, 2002, you would see South Korea having much more active entrepreneurship, and then the government fell and the chaebol kind of took over the economy again. So it depressed things for a while. In Southeast Asia, you get a lot of volatility, variability in Thailand, up at the top, very high level of high T rate. Malaysia is a remarkably low T rate until the last year. Now, if there was some sort of a problem in how they conducted their survey, that might be an explanation, but it could also have to do with external factors. Remember, Thailand has had coup. The military took over the government. There have been major floods 1 or 2 years. So you may be seeing external factors that are causing this kind of wide year-to-year variation. But they all have higher T rates than the U.S. Okay, this is a beginning. I think that if you talk about the amazing growth in GDP across Asia, it's sort of surprising that the T rate's not going down more. How come it's not tracking what the Global Entrepreneurship Monitor said was their 54-country average of drop in T rate as countries become more advanced? The China decline may be related to the general slowdown of the economy, but there's an awful lot more venture capital money in China to kind of offset that. I think you have to look at the attitudes toward entrepreneurship by people who are not doing entrepreneurship. So here's what we're going to look at. This is the U.S. profile in 4 areas that people asked. Here's the T rate. These are people who are actually involved in entrepreneurship. Of the people who are not involved in T activities, 63.5% of working age adults in the United States saw good opportunities around them for starting a business. We'll see, that's a very high percentage. But lots of opportunities for entrepreneurs. 54% of working age adults in the US felt that they have the ability to start a company. 33% of the working age adults in the US said that they felt constrained from starting a business due to fear of failure. And the last one is intention to start a company. 14.5% of working age adults in the US said that they intend to start a business within the next 3 years. So, of course, if you don't have a higher intention rate than a T rate, that's kind of, something's really strange there, right? You would expect more people to intend to start a business than are actually starting and running one now. If you compare how these attitudes in the United States developed over the last 15 years, the big change is in perception of opportunities. Wow, the press has really been effective here, right? People see opportunities for entrepreneurs all around them. The perceived capabilities in the United States is actually quite stable. We're a very confident people, and this is remarkable, actually. The fear of failure has gone up some, but not a whole lot. And actually, compared to Asia, it's lower than just about everywhere we will see. And the T rate and the intentional rate is pretty close to, these two are really tracking each other very closely. So it's interesting how close together those lines are. But it's basically a relatively stable graph. All right, what happens in China? China is a very interesting economy. First of all, there was this huge bump in the T rate and also in positive attitudes toward entrepreneurship in the year 2011. The year that the government announced that entrepreneurship was a strategic national objective. So you get external factors. There is a lot of year-to-year variation. I think that overall you see an increase in the fear of failure, right? The fear of failure is the one that's gone up the most in that graph. And you also see kind of an ambivalent attitude toward the opportunities for entrepreneurs, relatively strong, right? 35%. Now remember, in the United States, it's 63%, right? So that hasn't changed a whole lot. The same thing about capabilities haven't changed a whole lot, maybe a slight drop in capabilities. The entrepreneurial intentions seem to have gone down quite a bit, but they're still a lot higher than the actual T rate. So that indicates that there will be a supply of entrepreneurs, that it's not going to disappear anytime soon. You would expect the decline in T rate, given the kind of changes. Now there's other things that you can do. You can get a good job somewhere else. In South Korea, what you're noticing is considerably less perception of opportunities until the last 2 years. The opportunities that people saw for entrepreneurs floated around 12%, whereas in the United States it's 63% now, right? And has been going up steadily. But just in the last couple of years, there's a real nice bounce. So maybe this is part of what you were asking about. Where that came from is a good question. I'm guessing that it really has to do with a positive government attitude, incentive programs, but also the press. People really do pay attention to the media and this kind of thing. You see a fear of failure that looks high, but actually that's about the same rate as fear of failure in China. So it's not distinctively high. You're seeing a pretty big gap between intention and actual T rate, especially that gap has really hit here. So something very new, so that a lot of people are immediately interested in entrepreneurship, but they haven't yet started their companies. If you go on to Thailand, you see a pattern in which the perceived opportunities is higher than China, 49% in 2017, right? And it's been high relatively throughout ever since 2011, right? You've got this unfortunate gap here, and it really looked bad at this point. When was the coup? I can't remember when that was. It was more recent, right? Something may have been going on in the country at that point, external factor. But I would also look at people's self-assessment of their abilities, but also a very high fear of failure rate. The fear of failure rate is pretty much steady, the same as it is in China, higher than it is in the United States, but it's really the entrepreneurial opportunities that seems to be the distinctive difference. The actual rate of entrepreneurship tracked very closely for some years, but it's really broadened a huge gap in the last couple of years, so maybe there will be even more entrepreneurial activity in Thailand before long. And then, yeah, okay, you got to look at Japan. Japan, it looks like the fear of failure is off the chart, but it's only 8 or 9% above the fear of failure rate in Southeast Asia or in China. It's really not that far different. It's just that everything else is so low. Very few people see opportunities for entrepreneurs in Japan. And you do have a low assessment of one's ability to be an entrepreneur in Japan. So that kind of, the lowness in opportunities and in perceived capabilities is probably much more important than the fear of failure. That looks to be not that different to other Asian countries. Yeah, so what about the ecosystems that foster entrepreneurship? Those, what I've talked about, are really people issues, right? And people are one element of an entrepreneurial ecosystem. I think that if you're talking about a startup company, you're talking about how a combination of people and some idea and some capital come together in a new way. A new combination is a good definition of innovation, and certainly if people and capital and an idea come together in a new company, then you have entrepreneurial innovation. If you're looking at the ecosystem for supporting entrepreneurship, you need different kinds of things in those different blocks at different stages of growth. At the beginning, of course, you need founders, but you also need people who will be good advisors to a company. The first money that a company gets is probably going to be from an individual investor. The kind of things that you need in regard to ideas and knowledge, you do need access to new ideas. You need things like design thinking. You also need the perception of access to market. This is the perceived opportunity thing, right? And on the infrastructure side, there are things that you can have in a national infrastructure that really help or hinder startups from forming. But notice that the real issue for a startup company to be successful is not so much the entrepreneur, it's this stage where you need people who will go to work for somebody else's startup company. If you can't get good people in a startup company, you cannot grow it. You can't be successful with it. So you need that. This is where you see things like lean startup principles and rapid prototyping. Investor relations is a very important kind of idea knowledge to have at this stage. And this is the stage where VC money really comes in. Not so much the first funding for a company, but really the second funding or third funding. And then you have the exit stage. And there are two ways that two kinds of opportunities that will allow the investors in a company to sell their stock. If it's bought by another company, so M&A, or if the company stock goes public on a public exchange. At this stage, you really need post-exit opportunities for the founders and the employees. If the founders try to stay at their company all the time, their knowledge doesn't go to the next startup company. Whereas a good serial entrepreneur will take their knowledge from one company to the next one. So you see that these kinds of things, you need different things at each stage. In Asia, like everywhere else in the world, startup companies start with friends and family money. Most Asian economies don't have sufficient angel investors. If you look at those high net worth individuals, most of them in Asia are high net worth because of real estate. I saw a list of the 10 richest women in China last week when I was preparing for this. 7 of them are in real estate. So, this is not, angel investing. The venture capital investments have grown in Asia. We'll talk about that next few slides. There's this flood of VC money in China. And yet they tend to be a little bit different than the VCs are here. They're much more of a financial institution in Asia and think less like the kind of serial entrepreneurish attitude that venture capital investors do here. The exit patterns are quite different between Asia and the US, and I have slides for all of this. So if you look worldwide, the blue line's the United States. 4,000 venture capital deals in 2012, 5,000 venture capital deals in 2017. But look, from 743 deals in Asia, it went up to 2,847 deals in Asia in 2017. The amount of money raised went up in Asia from 5.2 billion to almost as much as the United States in 2017. That's a huge amount of growth in venture capital. A lot of it is coming out of China. The venture capital in China, a lot of it is connected to government money. There's not only sovereign wealth funds in China, but a lot of incentives to the financial institutions to create VC funds in China. There's quite a bit of strategic corporate venture capital, like we saw with Alibaba and Tencent doing all of their investments. And China is the new home to the mega deals. In the last quarter of 2017, there were 6 deals worth $1 billion or more, and 3 of them happened in China. So this is big deal. Look at who's the lead investors, right? An Indian investor, and I guess maybe you can say a Japanese investor. SoftBank is huge now. You've got Asia investment in more of these, right? Dentsu is a Japanese media company, and they're one of the investors in Grail. So the mega deal has really hit China, and so there's a lot of money. The exit pattern in the United States is really about 10% of the exits, or less than 10% of the total exits, buyouts, merger and acquisition, are by IPO in the United States. And the amount of money raised is not that much. But look at the corresponding chart from Asia. A lot more IPOs in Asia. But look how little money is raised by IPOs in Asia. The IPOs are much smaller. And this is not the case in China, okay? China is rather different from the other countries in Asia in this regard. But even in China, exit is still predominantly by IPO, less by M&A. Why is this important? It's important because the big companies are not profiting from open innovation like they are in the United States. If there are 9 out of 10 exits happen by a big company scooping up the startup company, even though that's often an ugly process, it means that the big company is seeing a business opportunity someone else has incubated and they think will be good for them. That pattern has not hit Asia as much as it has hit in the United States. So in India, the number of deals is down quite a bit, drastically. The amount of money is a lot lower than it was in 2014, 2015. But basically what you've got is more money flowing into a few mega deals in India. So in other countries, for example, in Japan, so we had what, $70 billion raised in Asia last year, of which $2 billion was from Japan, the world's fourth largest economy. So $2.5 billion went into startup companies in Japan in 2017. That is an awful lot more than 6 years ago, right? Almost, right? Almost 4 times more than it was 6 years ago. Strategic corporate venture capital by Japanese companies accounted for about $671 million of the venture capital investments in 2017. Now, this is obviously not including things like SoftBank's Vision Fund, which itself is $93 billion in size. But strategic corporate venture capital by Japanese companies that want some sort of partnership with a startup company as well as to invest in it amounted to quite a bit. A lot more than in the United States. The United States averages somewhere between 13% and 20% of all deals, venture capital deals, will involve corporate participation. The average in Asia is about 30%, and Japan is even a little higher than the Asia-wide average. Over half of Japanese corporate venture capital went to companies outside Japan. So guess who's in Silicon Valley? So Panasonic Ventures is now investing along with Scrum Ventures here in the Valley. There are quite a few Japanese companies that are here in the Valley that are quite active. In South Korea, also kind of sad, $574 million in 2017. And that was 30% less than it was in 2016. So considering $70 billion in Asia, you realize how big the China percentage of all of this investing is. It is true that Singapore, by itself, invested $1.2 billion in 112 deals, which is not bad if you think it's only for a 6 million person economy, but Southeast Asia venture capital funding is almost all centered in Singapore. Funds that invest actively in Indonesia, that invest actively in Malaysia, that invest actively in India and even in Dubai will be based in Singapore. So Southeast Asia is still in the early stages, except for this small number of mega deals, right? The big Gojek and those kinds of deals. So this is what Ernst & Young said in their analysis of venture capital funding that I thought was really interesting. Venture capital is growing around 15 or 20% a year in the EU and in Israel and in the United States. And this is in terms of volume and this is in terms of deal value. Whereas India and China are much more aggressive, and then Southeast Asia is really way out there, growing at a very high rate because it's growing from a very low base. Okay. The people flow and pattern, the people flow is really what we were talking about with all of that data from the Global Entrepreneurship Monitor. Right, the T rate and the attitudes toward entrepreneurship. It's a fact that you find entrepreneurs everywhere. The real issue for Asia is the growth stage. It's still hard in Asia to get the best people to come to work for a small, rapidly growing company that's not prestigious. It used to be easy in China. It's getting harder and harder. And, you know, Baidu, right? The BAT are draining off the good workers in China now. One of the problems is that incentivization is not well developed in most Asian economies. The people who do come to school here know an awful lot more about stock options when they go back and that they're starting to negotiate with people about jobs. I think that may be why a lot of them are founding their own companies. There is this social stigma, and the fear of failure is talked about a lot in Asia, and it is higher than the United States, but as we saw in all those detailed slides, I really think that the perception of lack of opportunities is a much bigger factor in whether people will go into entrepreneurship or not. It's a rational decision. Fear of failure doesn't sound rational, but if you don't see good opportunities, why should you bother? Especially this is the case if the labor market has a relative lack of mobility. Lifetime employment has been a bad tradition in Japan, because if you quit your company to go to work for a new company, you'll never go back. Whereas that happens a lot here. Somebody quits Google and starts a company, they may be hired back at Google, or the company may be bought by Google and they come back a few years later. So this is, you know, also a problem at exit, because too many of the entrepreneurs in places like Japan and Korea want to keep too much of their stock and create a new family company. Here, we expect to exit. I'll sell my stock, leave the money to my children, and start another venture. So that kind of attitude change is still evident in Asia, or attitude difference is evident in Asia. I think that there's been a big focus on commercialization inside universities all across Asia. Innovation is the key word, right? And what they're really talking about is commercialization of their research output. There's not nearly enough attention to the flow of business knowledge to founders. You'll get 3 or 4 students from one PhD group in some university in Asia starting a company, and there won't be a single business person with business experience in the group. So that hasn't changed yet. Mentoring has not yet developed like it has here. A lot of it has to do with the sense of face. If the mentor is so highly respected, you can't disagree with them really, right? And one thing about mentoring people here, they may take your advice, but they may not. I think that you have less confrontational board management, kind of management investor relations here, or in Asia than you do here. And, you know, the Confucian version of apprenticeship doesn't really lead to a lot of discussion of the reasons for failure. Why did you fail? I didn't try hard enough, will typically be the answer you get. And so this sort of thing doesn't really help for mentoring. Except for China, I think startup companies have traditionally had more difficulty getting to market in Asia, especially in B2B areas. And finally, this failure of open innovation systems. The big companies aren't helping the economy, and we need their money to flow into the exits of startup companies for it really to be successful. So, point 1, Asia's ecosystem for growth is moving along fine, thank you. Are we part of it? Maybe not. The new drivers of growth, there is this continuing structural change in China. There is a new middle class in Southeast Asia. People are really paying attention to the social and environmental problems that people have in Asia. There's this growth of the Asia investment community, where China is really moving into world prominence as an investor in new ventures. Southeast Asia is a hot spot for competition, and what this means for us is that if we're not careful, our big companies won't be players in those markets. And this is kind of like the automobile industry in the 1970s. If you can't have global revenue, you can't keep up innovation enough to be competitive. So this is a real issue for the United States. We've got to be in this competition. We've got to be fighting along with it. The entrepreneurship ecosystems are growing fast. They're robust. You can see this kind of ecosystem in the participation in entrepreneurship and the attitudes toward entrepreneurship. And there are still some ecosystem weaknesses in Asia. Finally, what's the wild card? Trade war? What happens? If we have one, if we don't have one, I think the important thing is if you're a company, what do you do, right? The emerging venture capital industry in China and Southeast Asia is definitely a big issue to watch, but be careful. Will it be too much influenced by government strategy or general hype? I've heard that if you claim your company is built around some AI technology, your valuation in China is double what it is if you're not. Is that hype? It does kind of look like 1998, 1999.com to me. The development of capacity for open innovation by big companies is proceeding. And so I think that the big companies aren't yet getting the value. It's a difficult organizational learning challenge, but they are learning. They're doing more than they used to be, but this is going to take more than 1 year to develop. So that's my presentation about what's going on in entrepreneurship this year in Asia. It's one of the most exciting kind of topics you can be involved with. We need to look at it. We need to be playing in these competition games. We really need to be there. And, you know, I'm looking forward to what our guest speakers will say for the rest of the series. But I'm happy to open the floor to questions now. What do you have? Go ahead.
So I took Lean Launchpad with Steve Blank last quarter, and I thought it was very inspiring to see how his Lean startup methodology can apply to the U.S. startup market. But in the sense of an Asian market, more specifically in China, how well do you think the Lean startup principles apply to startups in China?
That's also a really good question. I think that it's not only how they apply here versus China, it kind of depends on the business. One thing about innovation is no one solution works all the time. And you know, you can come up with a minimally viable product and get crowd response or market response as quickly as possible if it's a consumer-based application. How does that apply in medical fields? I don't really want it to be the guinea pig taking the minimally viable product drug, right? But his model is a great model, and it has had a huge impact in the United States. I think that in China it's likely to be popular, and I think it may be more popular there than in other Asia economies. In many ways, China is very much like the U.S. in terms of people attitude. We're just not as fast as China now. Okay, go ahead.
Can I add the previous
Sure.
people also? How was what happened the Lean startup methodology to apply to Japan?
Applying Lean startup methodology to Japan is also a good challenge. Japan has a very robust early adopter consumer market. So games have done really well in Japan. Other kinds of things do really well in consumer markets in Japan. But again, B2B is not the place to try Lean startup too much in Japan, right? You're beat up too much. You really have to have a good solution that is ironclad. Maybe not all the bells and whistles, but I think that probably the most important thing that I would say about Lean startup is, like all principles, design thinking or whatever, They are wonderful ways of codifying a particular approach, a way to do things. But whenever you apply that to a specific situation, this is reality, and this has to take precedence. You have to always be willing to give in your approach if it will get the right results. But, you know, that's why this is hard. That's why, that's why innovation can't be cloned. You know, why is it a continuing area of competitiveness for a high-income economy? You can't standardize it. If you could standardize the way you start a company and make it grow, sure, it'll all flow to lower-cost economies. We're going to be out of that market too. But innovation just doesn't work that way. It's a combination of cleverness and risk-taking that is different each time. But also a good question. Go ahead.
This maybe goes along with trade war, but I was wondering your thoughts on national security, especially U.S., China.
So, okay. Now, this is a very important topic. And I think that national security was used as a reason behind the recent tariffs. And that's using an H-bomb to kill a rabbit. Okay, it's really not a good idea. And I personally don't think the tariffs are a good idea. I think that there has been a lot of protectionism in various economies. China's certainly protectionist. You look at the companies that you can't get in China. You can't see Facebook in China, right? You can't see YouTube in China. That kind of thing is not that unusual in the history of the world. It was kind of that way in Japan 30 or 40 years ago. And as China develops, in order to open up the playing field for startup companies in China, they can't be as protectionist, right? That's got to change. But the United States really needs to find ways to leverage its position in the world community in order to have more influence. This is a huge battle for influence going on, not only in Southeast Asia is a big market, right? 600 million people, 40% of world GDP is in Southeast Asia. And so we have to be able to not try to do everything by ourselves, but really work with the community to have the kind of influence we need. The national security issue is also whenever you have dual-use technologies, you have export controls, ITAR regulations, that is a difficulty for American companies that American companies need to be prepared for. But in general, when you have a regulatory problem, there's always a solution. And so I think that, you know, we've done pretty well with dealing with highly regulated areas. But, you know, certainly national security is an area. And it's interesting when you're talking about know-how, you can't keep other countries from getting it. So what you have to do is to be more agile, more nimble, faster, and come up with better things yourself. One thing about the innovation economy is you have to always be on the leading edge. So that's a good question, a difficult topic. Other questions? Go ahead.
Thank you. Can you speak more to the evidence on the productivity of these startups or these early stage companies? Because, you know, the bigger picture is if growth is going to be attributed to the future of innovation, I'd love to hear your thoughts on whether what you see in Asia is because of what's been argued is it's their competitive advantage.
Yeah.
They're better at automobiles, better at electronics, or is it how much of it of the future do you see is going to be because they're innovative and these early stage organizations are leading the charge on productivity and advancement?
You've asked a hugely important theoretical question. What kind of evidence could there be? So one kind of evidence I can think of would be value at exit, right? So if you go back and you look at the value at exit of these companies, you may see something that is giving you some sort of an indication of how much their innovation has been valued. I think that people have tried, looking at high-value patents, how many patents go into international PCT, Patent Cooperation Treaty. That's an indirect measurement at best. And one of the things is, how do you measure productivity and innovation? Companies can't even measure the productivity of their own research and development people, right? It's not the number of patents you write a year. It's not how many bugs you find in the software code. It's really difficult, and so you have to look for these things. I would look for exits. I would look for value at exit as an indication. And I think that when I'm asked by a region to talk about improving their regional innovation system, always look at what they're strong at. Because what they're strong at will be the jumping off place for the next thing. If you look back at the history of Silicon Valley on the IT side, we're called Silicon Valley because of silicon wafer manufacturing. There's not a single silicon wafer manufacturer left that's got its factory in the valley. From that came the computer chip era, right, with Intel. From that came the computer systems era with Sun Microsystems. From that came, the software era with Oracle. And it just keeps going on, the internet era, the e-commerce era, right? And now the sharing economy. Really, if you look at what Tesla Motors does, it's building an IT system around a mobile base. And it's really the value of the connectivity as much as the value of the motor that is really worthwhile. So, you always look at what something's strong at as the next jumping off place. Where can you jump from here? But it's really hard to measure. Maybe one more question. If there are none, we should have some refreshments outside, and I'll happy to stand around and get to know you a little bit better. Thanks very much for coming, everybody, and we will have a session next week. We'll talk to you more about that soon. Thanks.